time really kind of raising capital. And really the best way to do it is with inside a passion of mine. And really the boating world has a lot of wealth in it. I mean, you can go from, small lake boats to yachts, go to Monaco. I mean, you can go to boat shows, and there's a lot of wealth out there. So, I think I just kind of wanted to do something that I enjoyed, which is boating. And I kind of utilized that passion to tap the wealth inside that market.
What's going on, everybody? Chris Naugle here with Money School Podcast. And today I'm going to blow your mind. Matter of fact, I'm not going to blow your mind. My guest, Ryan Garfield, is going to blow your mind. So let me just give you a little insight about Ryan. So first off, he's built the largest man cave business there is. That's the coolest part. But that's not where he started. He started as a private lender. He's done about $1.5 billion in deals throughout his career. Right now, they manage $500 million in projects. So he's no stranger to what we talk about every day, and that is how your money works for you. But here's the coolest thing I want to get into. Not just the man caves, but he's also into offshore racing. You know what that is? Those really freaking cool boats that race offshore. The ones that when they hit the big wave, they split in half and it's like, hey, there goes $500 million. I don't even know what those things cost, but a lot. But the coolest thing about that is not the fact that the boats are expensive, that they're super fast and they're super cool. It's the network. Think about that. If you were out racing offshore boats, who would be the other people that you'd be surrounding yourself with? Wouldn't they be wealthy individuals, high net worth individuals? Because they're not racing those kind of boats unless they got some capital and some cash. So he gets to surround himself around those people. And you've heard it a million times. Your net worth is your network. Your network is your net worth. Your net worth is your network. You can put it either way, but welcome to the show, Ryan. I'm super excited about today's conversation.
Well, Chris, what an honor. And I enjoyed our first conversation about this podcast and knowing your background. I felt this was going to be really synergetic, and I'm really excited to be here. And in fact, you are right. We have a lot of projects under development. I'm sitting right now in our project called Paradyme Stores in Lake Havasu, Arizona. We have 225,000 square feet of boat and RV storage, man caves being built right here. So it's exciting. If you hear some buzzing in the background, it's because construction's well underway, and we're blessed and we're honored. So thank you very much for having us here.
Absolutely. Well, I want to kind of talk a little bit about not what you're doing today, which is some awesome stuff, and we'll get there, but I want to take a trip back in time, and I want to talk a little bit about your journey to where you're at now. I mean, I'm sure you didn't just roll out of bed one day and all of a sudden you had all these high net worth individuals that wanted to, talk to you about you helping position some of their money in these family offices, just kind of knocking at your door and lining up at your door to give you family office money because you've got something. It didn't start there, I'm sure. So can we walk people back and just tell them the journey, the failures, and the things you had to do to get to where you're at today? And then we're going to talk man caves.
Yeah. So, cut my teeth in the space 20 years ago. Believe it or not, I started in a call center slinging regular conventional mortgage. And this was when, the subprime market was a big deal. So you had 228 LIBORs, you had a lot of those option arms going on. And we ended up, kind of opening up more mortgage companies through 2008 or prior to 2008. Once the '08 crash happened, I literally lost everything. And I was very fortunate enough to actually put myself in a room where there were some high net worth individuals. One specifically was a former hedge fund manager from China. And he was managing a $2 billion family office fund and moved to Las Vegas, which was the foreclosure capital in the country. And I was lucky enough to meet the guy, and he loved that fact I had a lending background, and basically said, hey, look, have you ever done private money before? And I did a few little deals here and there prior. And he said, well, look, I'm going to give you, private capital. I want you to go help people salvage their non-owner occupied properties and their investments and refinance them or do what you got to do, but get them out of these bad loans. And that really kind of shotgunned me into doing, distressed assets, workout turnarounds, and private lending. And to kind of fast forward, I've always continued to try to raise capital utilizing our social media. So when the Job Act changed in 2013 to solicit to raise capital with accredited investors, we kind of jumped on that train, watched a lot of the crowdfunding companies throughout the country, and the ones that were successful and not successful, one being Realty Mogul being the pioneer. And they had raised $700 million in like 5 years. And this was like the first real slug that, some of these institutional backed crowdfunding marketing at a mass level firms were doing. And so I was going, well, shoot, I already have a background with, a large network of investors and let's just say Facebook at the time. Why don't I chase them down and see if they want to invest into some of my projects in Beverly Hills and Bel Air? And that's really kind of how we cut our teeth into raising capital and getting into where we are today.
I love that. So folks, did you hear that? He didn't just roll out of bed into this. He actually had to climb his way, and he met one person that led to another person that led to another, and he almost lost it all. But Ryan, real quick, some of the folks that listen to this podcast might not understand what a family office really is. I mean, I think most people that are listening to this are smart enough to know when you got some money, you go get a financial advisor or a financial planner, and that financial planner just lets you sail off into the sunset, right? But there's a huge difference between a financial advisory firm and a family office in the way they invest, because I think a lot of people, to be quite honest with you, have it in their head that wealthy people just go out and buy stocks and buy mutual funds and invest in 401ks and do all the same things that they're told to do by their financial advisor. But you and I both know that is very much not the truth. And what wealthy individuals do and high net worth individuals, including family offices, do is completely almost 180-degree difference from what the average person would see or hear about from a traditional financial advisor. So can we just start with, what is a family office? What were they built for, and how do they operate, and why do they operate different than financial advisors?
You know what? So there's so many different legs of a family office, but I'm going to kind of lean into what I do as far as what my background in real estate. But think of a family office as a individual that typically, or multiple individuals, a firm that has a background in investing, but is also very diversified. And the reason why these, let's just say these firms kind of exist, is because wealthy, once they start making money, the most important thing is retaining the wealth they've created. And one of the massive strategies and first and foremost, the biggest strain on wealth is taxes. So when you start making money, the very first thing you start focusing on is, how do I keep the money and how do I pay less tax? Or how do I keep investing and scaling our businesses? So like for me, I'm at a point in my career where if I save in taxes, I can hire more people, and therefore my company becomes more sustainable. We have a deeper rooted foundation. So I try to retain as many assets as I can and work on tax strategy. And that's really what a family office does too. So you'll work with let's say an individual or a firm that has a diversified background in investing in stocks or life insurance policies and real estate. And they'll manage either one particular wealthy family money, or they'll manage multiple families. So you'll hear multi-family office or multiple family offices. But that's really kind of the nature of what a family office is. It's an individual who manages a family's trust or one particular family, and try to marry up the needs and risk tolerance that family has in regards to their aggressive nature of investing. High return, typically high risk. Less return, a little bit less risk. So those family office individuals that manage family money typically dive in and become very close to these families and understand what it is their needs and goals and desires are. Are they leaving money to the next generation? Do they have ranches? Do they have assets around the world? And really what they do is they oversee it, try to manage taxes, and help them multiply that wealth in multiple different spaces, but again, are typically very versed in what's happening politically, what's happening with institutional levels, what's going on in real estate. So they're usually a firm that's very knee deep into the trenches of the investment space to help these families make good decisions.
That was a great explanation. And I know that was a lot to unpack, folks, but a couple things in there that I really want you to understand. And I talk about this all the time. There's a huge difference between somebody who's rich and somebody who's wealthy. And what you just heard him explain is exactly that definition. Folks that are rich typically are the next poor people. And I shouldn't say poor, but the next broke people, because they have not yet learned how to retain and keep their wealth. Someone that's wealthy, just like Ryan said, is somebody that has figured out how not to give the money back. And that is multifaceted. That isn't just, we invest so that we keep growing it. No, it's they know how to preserve principal, but they also know how to do tax advantaged investments, tax favorable investments. So all that stuff that you just heard, you might be thinking, oh, I'm never going to get there. Well, if you say you're never going to get there, then you never will. But also you might say, oh, I'm not there yet. That's okay. Always remember that if you're trying to climb to that level where you can say, I'm wealthy, so much of that level is about preserving what you've built. And it doesn't just start when you have millions of dollars, you're preserving that. It's the whole process. Like if all you ever do is just roll the dice and, put it on red or black, hypothetically speaking for investing, then your chances of always starting back over are very high. So wealthy individuals don't do that. Now, I want to take this conversation and I want to flip it just a little bit, because both you and I know, enough about Wall Street to understand that sometimes it's a rigged game. I spent 16 years there, retired in 2018, but during my time, especially the last 4 years, I saw a lot of things, and I saw a lot of things that I don't even talk about most of them openly, but they spooked me, and they spooked me badly, which is why I do a lot of the things I do today, which is completely off the beaten path. And one of the things I do today heavily is lend money. I became the bank. A very wealthy individual in 2014 on a stage said the ultimate in real estate is being the bank. And I know this is the world that you come from and that you're still in, private lending. And these family offices come to you with large chunks of money, and they want you to go out and they want you to place private capital, private lending capital. So can you just explain why you're heavily into this, private lending? What do you think the future of private lending is? And do you think there's going to be a day where individuals, who decide they want to be the bank, they want to, lend money, will literally challenge or disrupt the current banking systems?
Yeah, I mean, I can tee off for hours with you on this one. I'm going to be a little biased just simply because I've cut my teeth in the space, and we currently are managing a fund for private lending, hard money loans, fix and flip, stranded construction nationwide. And so let's just kind of back into this. Let's say 3-4 years ago when the pandemic hit, right after the kind of shockwave went away, real estate just started booming, right? People were putting offers in to buy a house 100,000 over asking price because the demand was there, interest rates were low. Well, at that time, the mentality was, and the mindset overall throughout the country was, we can build wealth, we're making money, we're doing really well. Well, now look at the volatility in the market and the uncertainty. We have everyone's stressed about elections and who's going to take what's that outcome going to be? And now the mindset shifted a lot to wealth preservation. I want to try to keep the wealth that I've created. So a private lending mechanism or a security instrument like a first trustee mortgage, in my opinion, is the most secure real estate investment you can get into. And on the private side, typically you have lower leverage loans. So an example, you have $1 million value on a house. As a private lender, you're only going to go 75, 80% of value as is, or you're going to increase do a value add in finance, but you're going to hold back the construction dollars until that rehab is continuing to move along, and therefore increasing the value of the property. So then you're going to be at 65, 70% of the future value. Ultimately, what that means is that, there's no time in history, even during the Great Depression in certain areas, especially high growth, high demand, mass population movement, where the depreciation of those real estate assets dropped so more than 20, 25%. It did over time, but it didn't happen overnight. So a lender can kind of hedge against the risk based on doing lower leverage loans. So in my opinion, right now, to give you an idea, my largest family office, most of my larger check writers are all in that security instrument fund, a first trustee mortgage, hard money loans. Trusted investors, people who have IRAs. They love to roll over their IRA, do a self-directed IRA into a trustee investment. They make the interest clip on it. They get taxed on it, or that interest goes back into their IRA and they just accumulate more and then continue to lend out. That is becoming really the movement. Now, I know this is kind of loaded, and forgive me for being a little long-winded.
No,
but
it's good stuff.
I think we all remember the smaller banks, like the community banks, had runs on banks. I think we all know that back in GFC days, we had 14,000 banks. After 2008, we dropped to like 4,500 banks, right? And it's going to continue to drop. How many people, I think, would raise their hand in this case when things were starting to shut down, like SVB and Signature Bank and all that? What was happening is people were pulling their money out of small community banks and going to the Wells Fargos and Chases and the large institutions. Well, that was a calculated move. But as those smaller banks don't have money on deposit, they don't have the ability to lend. So certain banks are more comfortable in their own community to lend where a big institution may not be. So for example, I'm in a secondary market right here, Lake Havasu, Arizona, 2 hours from Vegas, 2 hours from everywhere in Southern Cali, 4 hours in some cases, and then 3 hours from Phoenix. So it's a small community, and the Census Bureau isn't up to date on data. So to try to get a big loan or a private money loan out in this area is going to be more popular than it is to get an institutional bank. Even a bank right here around the corner, a little small community bank, closed their doors. So I think the wave of the future is private lending, especially with investors right now that understand this is election year. Elon Musk can throw out a tweet and crash the stock market. A lot of people are going into cash positions, pulling their money out of stock and going into a security instrument. And then to sum up, because the largest wealth generation right now, or the biggest generation that has the most wealth, is the baby boomers. Baby boomers are seeing what's going on with crypto and FTX. They're scared with crypto. They're going, hey, you know what? I don't know that. It's too volatile. I'm stressed out trying to trade myself. How about I just go into something that I know, real estate? I built all my wealth in real estate for the most part. I built half my wealth in real estate. I'll just keep playing into something that makes sense. Hedge against inflation has always been real estate, what have you. And so you're seeing a lot more movement from investors, people who are looking to retire and move money into, again, a first trustee security instrument, hard money lending, working with guys and myself, like you and myself, to put that money to work and have the licenses and boots on the ground to oversee that project as well. So to sum up, it's this, we are going to disrupt the banking system by controlling the wealth and therefore putting it out and being a lot closer to those assets than like 2008, where you just had thousands of loans on your balance sheet and there was nobody internally to be able to watch over that. A smaller firm like you and I can watch over every asset that's in our portfolio because we don't have thousands of loans. We only have a couple hundred loans. So we can watch over those assets and be a lot closer to it.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up. Gosh, I love what you just said. Now, folks, I know a lot of you listen to this show pretty regularly and some of you are newcomers, but what is it that I always talk about? I always talk about how you can take control of your money and how you can be the bank, right? Mimic the bank, act as if you're the bank. Ryan, up to this point, like we've had some brief discussions, but more just about him because he's my guest. He doesn't know what I do really. He doesn't know about Private Money Club, but doesn't that sound like he just described the future of Private Money Club? And Private Money Club, the dating site for money, bringing money to people with money together with people that need money privately, so that's he didn't know about that. He doesn't know about what we do with BYOB, Be Your Own Bank, but he just literally described everything right there without knowing anything. So when you start thinking about what the wealthy do and how they think and what is happening, and what will be happening in the future, just that right there is solidification, okay? Because he's working with high net worth individuals, and they are being the bank. They want to do what banks have done for hundreds of years because it's the safest path to preserve capital and make good returns. Those first trust deeds that he's talking about, like it's just a first position mortgage essentially. Not to get complicated, but that's what banks love. They love lending money in a first lien position because they hold all they hold all the cards. But when you're only lending it, let's just say 75%, the market's got to drop very quickly, 25% for you to ever even be worried about losing your money or losing position. And that just hasn't happened in history. I'm not saying it can't happen, but if it ever had gotten close, the 2008 Great Recession was the closest we ever got. And we didn't even get there. So that's why they're doing this. Now, I want to take this conversation and I want to flip it to talk some really fun stuff now that we've got the baseline of what you do at Paradyme. And folks, just so you all know, the name of his company, and you can check it out, is called Paradyme. The website is actually Paradyme Investments, and I'll put it up in the description. Paradyme Investments. It's spelled a little different than you might be thinking, so just check the description. Check it out. His website's awesome. It does a lot more stuff than what we're getting out in this podcast. But let's talk about some fun stuff. man caves. I talk about them all the time. I mean, listen, like, I'm a man, so hey, I like man caves, and I like offshore. I like fast, big, expensive boats that make that gurgle sound because I like gas powered engines. Don't like those. Is there actually, sorry, got to ask you, are there any out there in the offshore boating world? Have you ever rolled up to a boat that's EV? Just asking for a friend.
No, you know what's funny? You brought that up. There is a guy that did start pushing that. But the problem is in their outboards. The problem is that it's so heavy with batteries. He's not able to get the speed out of it that he wants. So it is a CAT. It's an offshore boat, but he's just not able to get it. So the technology isn't quite there yet. But respectfully, it's so new still to the boating world that you don't get a lot of support. So it's really hard for him to monetize that or anybody at this point. So still too fresh.
I just can't see it because the reason
I like electrical
offshore,
and water.
Electric on water first. The fact that the boat makes no sound. I mean, listen, I love watching boat racing because the engines they're terror. It just sounds badass. How did you, first off, before we hit the man caves, how did you get into offshore racing and offshore boating? Like what got you over that hump?
You know what? So really, my father and I, at a very young age, started coming out to the river here in Lake Havasu. We grew up in Southern California, and so we'd always come out here for vacations. And I always tell everybody we were balling on a budget. My father was in law enforcement, so we didn't have a lot, but we were able to get jet skis, and we started there. And then he had a bunch of friends that had boats, and I started skiing, and so I just kind of became a water baby, a lake baby, and so. Naturally, I started, I grew up around boats. I have 3 kids as well, 2 adult or soon to be adults. When I say adults, meaning like coming out of high school here. And then I have an 8-year-old. And so we've always been, taking our family out to the lake. So over time, I just kept buying bigger, faster boats. And then come to find out that was a vice of mine that my wife's like, well, if you don't drink and go to the bars, I'll let you blow your money on the boat kind of thing, And so that's what happened. And so and because of the nature of what I do, I'm the founder chairman. I brought on CEOs and some other people to manage the office. And so now I'm really kind of raising capital. And really the best way to do it is with inside a passion of mine. And really the boating world has a lot of wealth in it. I mean, you can go from, small lake boats to yachts, go to Monaco. I mean, you can go to boat shows and there's a lot of wealth out there. So I think I just kind of wanted to do something that I enjoyed, which is boating. And I kind of utilized that passion to tap the wealth inside that market. And we've grown into, building man caves. And so to kind of back into this, and I think this is a quick, cool story. When I delivered one of my phases here at Paradyme Storage, we sold out. We sell out all of our. So what we do is we'll go in and buy a piece of land. We entitle it, we plan it, we design it, and we build these big man caves. But it's a community. We have 225 units here. So it's a lot of units. And so therefore it's kind of a community feel, as you can imagine. So once you guys leave their garages open, they have all kinds of old cars and boats and everyone kind of tinkers. But the funny thing was for whatever reason, I just kind of geeked out one night and I was looking at all of our purchase contracts and the names on the purchase contracts. And I'm like, man caves, I know it's great. It's not as trendy. I mean, people love it, but a lot of women love this stuff too. So for whatever reason, I decided to look at all of these purchase contracts. And I was like, like 30% of these purchase contracts are women. And a couple of them are friends of mine. So I call one of them. Her name's Nancy. She's one of my best friends. I love her to death. And she just retired a couple of years ago with her husband. And I call her and I say, hey, I said, why are you buying a unit? I'm just kind of curious because I'm seeing all these other purchase contracts with women. She goes, Ryan, I love my husband. I've been with him for 35 years. She's like, but now that we're retired in the same house all day together, he bothers me. And I want my garage back, and I'm sending him to a different location so he can go get out of my hair. And I just was dying. Well, I called a couple of other ladies that bought, and I see them all the time because I'm on site. And I'm like, so why did you buy the unit? She goes, well, first of all, I was looking for a write-off and real estate, what have you. The entry point's lower than a house, right? And you can get good rent for him too. But she goes, but I wanted my husband out of the house. He's bugging me. And it's like this common theme. And I'm like, I need to rename these from man caves to like dog houses or something, It's pretty funny. So it's just become this really cool trend, and really it just took root. It wasn't something that we were digging into. We have a winery that we syndicated $185 million for the total project cost. We've done, multifamily right now. I'm building multifamily in San Antonio. We've done stuff out of San Antonio, or I'm sorry, Lakewood, Colorado. So right outside Denver, we did a three-story townhome product. So I've been building and funding projects that are different than this. And because, I'm a lake baby and this deal presented itself to build storage, it's a little bit less stress than building residential. And so, well, shoot, man, I'll go in there and build these man caves for everybody to hang out. And it just took root. Now we're the largest man cave developer in the country.
Freaking awesome. And, I'm 46. I've been with my wife, long time, well over a decade. And I can tell you, that makes a lot of sense. Like, I'm just thinking about it. Like, I'm always here at the offices and I have a man cave. I call it a studio in the back where I got my cars and all my studios, and that's where I hang out. But like, what would happen if I didn't have that? And every day I just worked a normal job, or I retired and I was home bothering her and just tinkering around the house. She would be like, get out of here. Like, what do I got to do to get you out of here? And I have the answer now, sweetie. You just got to buy me a man cave. That's it.
Yeah, it's true. It's true. Well, and what's cool is that, a lot of these guys, you don't really ever retire. Guys like you and I, we say we will, but we don't. Look, you said you retired at 18, 19. You're not retired. Look at this. This is your business. You're still lending money. So you're probably never going to retire. And that's kind of some of these guys, they're always wanting to do something. They still have little businesses. They build pools, or they're building old street bikes, or refurbishing this, or building whatever. These guys are doing the coolest things. I have a guy that has, Baja trucks against the wall, like literally on the wall inside his man cave. Some cool stuff. And that's what you're seeing, is that these guys want to go somewhere where they can have their tools, they can have their stuff, they can put couches in there and bathrooms and showers. And, literally the sky's the limit on what you can build.
But the one thing, I keep going.
No, go ahead. No, it's just everyone loves them. That's not one person that I've met that's walked into it and is like, this is super cool. Totally see and understand why.
It's super cool. But just going back to what we said in the very beginning, and you said it right out of the hole, your network is your net worth. So now you've created this network of man cave communities. It's a man cave community. Like, just think of all the people who are buying, the men and women who are buying these man caves. They are affluent. They have the capital to just buy a man cave that they park their Baja trucks in. They park their motorcycles, their sports cars, their classic cars, their offshore boats or boats, whatever. I mean, like, it takes money to do all those. So now you've got this community where you're going to hang out because you've got your man cave there. Who are you hanging out with? All the same people that think like you, that are always continually building and creating, because the ultimate thing in the world, folks, is creation. You want to completely fail in life? Conform to what everybody else does, conform to what you've been told. You want to succeed in life? Go out there and create it. And this community of man caves, they're still creating. I guarantee these guys and gals are getting together and just being like, oh yeah, let's do this. And then they go do it, because that's all they know is creation. And I think that's just the coolest thing. I to be honest with you, I've always watched man caves and all this stuff, but I've never really thought about the community aspect of that. But you certainly have, and I think that's fantastic. What else do you got going on? I mean, you got Paradyme, you got, the largest man cave, developments in the country, but what other things are you doing in your free time?
You know what? I as time goes on and the way the world is, I'm becoming more of a family man, I would say. I'm trying to spend more time with my kids. My oldest son plays Division I baseball. He's a starting catcher for his high school right now. And my youngest son does jujitsu, and my daughter does lacrosse. And it's hard because I work so much, but now I'm trying to spend more downtime getting to their games and being a bigger part of their lives, which is important, because at the end of the day, I did all of this for them, but I got to remember that I have to still be there. I can't. So that's been huge. One of the other things too is I'm working with a couple race teams. I can't disclose yet. They're kind of bidding out to see who's going to bring me on to go race. Which would be great. Which kind of goes right back into just staying with inside the network. Other than that, my wife is building a kind of a health and wellness business that I'm really a big part of. And our next big venture, what we did was when we delivered the first phase of this project, a lot of the buyers were asking if they can live in these units, because a lot of these have plumbing. I mean, people are putting bathroom showers, washer and dryers in there. So like, for example, if you have a boat, you have all your towels, just throw all your stuff right there in the washer and dryer and leave it right there inside your unit. You don't have to take the towels home and wash them and what have you. I don't know about you, but I always forget the towels at home. And my wife was like,
100%.
babe, it was your job. Now we're going to Walmart every time we get on the water to go get more towels before we get on. So, so it's that I listened to that and I'm like, there's kind of a marriage since I have a background in building homes too. I'm like, why don't we build homes with like big RV garages? And then I built 3-story products. So I'm going, well, why don't I build big garages below, create more of a high dense community, try to keep the cost down due to the economy, right? Trying to be in more of the affordable space. And then build, big RV garages down below. And then 2 stories above that will be residential. And that's what we're doing. And you'll probably enjoy this, and forgive me if it's a little long-winded, but what we did is I bought, so right where I'm at right now, it's 14 acres, 225,000 square feet of storage, boat and RV storage. Right across the wash is another 18 acres I just acquired. And what we're going to do is we're actually breaking up into 2 different parcels. Now, in this area, because it's such a big retirement community, the health and wellness is becoming more popular because with big pharma, people aren't believing in it as much anymore. So their doctors are even pushing some of the elderly to go focus on health and wellness and do stuff more organic. So that is really coming out here. But the one thing I will say is that the gyms here are really bad. They have like a Planet Fitness, which is probably the only big corporation or institutional guy that are here. And I have a background in health and wellness. And so I'm like, maybe why don't I do this? Why don't I maybe bring in a gym? But here's what was the moving piece to that. When I was looking at building, so one of the biggest selling features for any units like this or a residential community, is your HOAs and the cost. Everyone hates HOAs and the cost of them. So my biggest focus was, how do I keep my HOA costs down? Well, because this is Phoenix, Vegas, it's in the desert, it's hot. So I can't build a residential community without a pool. Right? So if you're going to build a pool, you have a little community center with a little gym, what have you. Well, I realized as insurance costs are going up, so those of you that are flipping properties and getting insurance for your homes, you're realizing how much the cost of insurance is going up. Well, that's on everything. So when I was going through my budget, I went to my insurance agent and said, hey, I want to do an umbrella policy with this, and what would that cost me? Well, it was $56,000 a year to have insurance policy for that pool. Well, now obviously I'm going to take that cost and I'm going to pass it on to my homeowners, right? So what I did is I said, well, how do I eliminate that? So I looked at Lifetime Fitness. You may or may not know this. Lifetime Fitness is actually a multi-family developer. But what they did is they maximized building as much rentable square feet out of their residential side and just built a big gym across the street and gave their tenants access to that gym or, incentives to go there or breaks on the cost. So I said, well, why don't I do that? Why don't I just build a gym and then bring in a big tenant that'll pay me money and take on all of the costs to manage it? So what it did is 2 things. When you build a community and you have a community center like that, that building has no value. It's only an amenity package for the homeowners. If I'm able to separate that building from the community, meaning just on the parcel, but it's still attached to the community that people have access to, and I bring in a gym or a tenant at all, now that building has value because I'm generating income. So it increased the returns to my investors and made the entire project more desirable, and then brought down my HOA costs. So my next big venture, we're building about 500,000 square feet of residential, and the gym there, it's going to be a 30,000 square foot gym with a big pool outside. We're bringing in all the best equipment, as you can imagine. I'm bringing in a big operator, has 30 locations throughout the country. And then we have our residential, which will be a 3-story product with big boat and RV man caves on the bottom story. So that's our next venture.
Wow, that's really cool. And I did not know that about Lifetime Fitness, but that makes perfect sense. And it actually just made a lot of sense. And a lot of the things that I've seen where there's always a gym and a pool in these things, and the gym is never much. It's sort of just bare bone basics. And you're always like, well, why didn't they do more? Well, it's because they just did that just to appease that requirement there. Interesting how that all works.
Chris, just to share with you, we started in financing and flipping properties. So, a lot of your viewers, one day they may get to that point where they're like, okay, I'm going to go ahead and start maybe buying a 6-unit property and flip that. Or maybe I'll buy, 12 units and hang on to it for cash flow. Nobody sits around and flips properties for the rest of their life.
No.
Typically you go, okay, well, I'm tired of the hustle, a lot of stress. How about I start buying these assets where I can cash flow them and obviously implement some tax strategy, and then start monetizing? Really, to be honest, that's how we did it. We just kind of continued to walk through doors and pushed ourselves. It wasn't easy, but a lot of your viewers may eventually go from flipping properties to scale, so that may be something that, you may be able to help them with down the road.
100%. No, I think there's a lot of synergies here with Private Money Club, what we do with Money School BYOB and the Money Multiplier. There's lots of different connections here, but I just love the story. And one thing I also loved, and I remember this is one of the first things I did when I got your bio, is I went to your website and I scrolled down to see your team, because that's what I always look at. It's like, there's a visionary and somebody, the founder, but there's always a team, and sometimes the team isn't very big. And I'm like, okay, this person's just running in circles. But what you did, which goes right into your goal of spending more time with your family, is you eliminated yourself from the business so you can work on the business to do cool things like you just talked about for this entire podcast. It's because you built an executive team of just rock stars. I mean, folks, if you go to Paradyme Investments and you look at some of these folks in his team, like they're straight up rock stars, like hedge fund managers or former hedge fund managers. And that all comes at a big cost. But the cool part is you realize cost is only an issue in the absence of value. And to you, your time was the value. Your time with your kids was the value. And I think a lot of business owners, they don't ever get to that point. They work in their business their entire career, and it becomes almost like a jail cell for them. It becomes a trap because they've built their own job for them and they can't get out of it. You found that way to build that executive team. You found that way to spend the money because you saw the value, and it's worked, because it always works. So I commend you for that. And I commend you for doing that to spend more time on the next phase, which is your kids and these future visions of the health and wellness. I think the next time we have this podcast, I think you'll be on to all sorts of new stuff, and can't wait to hear it. But as we kind of come to the end of the podcast, what are some ways people can learn more about what you're doing? If they have interest in the man caves, where can they learn all this and see this?
You know what? So I tell a lot of people, not only do our website, we have a YouTube channel as well that's becoming a little bit more popular for us to continue to post stuff up there. But what I would tell everybody is watch our social media, specifically my personal Instagram, because I run that myself. And I share, family stuff and what I'm going through personally, down to, all of the business aspects and certain things I see going on with the institutional level, and where, BlackRock, Blackstone, some of the large institutions and some of the movement that they're doing, and kind of give everybody a deeper dive into what I do. I've written 2 books. Both of those books had a projection of the market. I was right both times. I think I got lucky. But we're finishing a third too. So, I would say my personal Instagram, which is great. So it's just Ryan Garland _Paradyme, and then Paradyme Investments. But you can pretty much Google me and find me anywhere too. So if anybody wants to, reach out, please feel free. But Instagram is always a good way to at least build rapport and get to see me for who I am as a family man and as a businessman, and just realize I'm nothing special. I just work hard, and I have really good people around me, which took a long time to acquire. It's hard. You get a lot of people coming out of your life, but if you have a good running firm and you have a good vision and you're really core focused and you have people that you're equally yoked with inside your outfit, you'll do well. So I typically and continue to highlight everybody. It's about my team. It's not about me. I'm the visionary, but I do have the people in the back office making sure it all comes together and we stay compliant and we do all the right things, because we don't know where the world's going. We just got to be conservative and try to play it smart and look at data and make the moves according to data, not emotion. So that's really the best way to find us.
All right. Well, folks, we're going to put all those links, including his personal IG, which I know a lot of you love getting kind of down and personal with the folks that we have on this podcast. We'll have that all in the description. So check it out. And Ryan, man, thanks for your time. Thanks for coming on and sharing your story, and keep up the good work. I can't wait to see what you do next.
Chris, thanks for having me on. It was an honor, and I really enjoyed the conversation we first had. And that's why I knew I wanted to surround myself around guys like you, man. That's why I like doing it. I'm very particular on which podcasts I get on, as you know, and I really feel honored. So thank you very much, and kudos to your success. You deserve it.
All right, man. It was my honor and my privilege to have you on, and I'm glad that we made time for this. So, folks, thank you for joining us for this episode. Make sure you check out all the adventures and stories and everything that Ryan's doing. And with that being said, we'll catch you on the next episode.